Hey, we're taking a look at the S&P 500 as we get ready to trade November week 2, 2019. And this is just backing up the things that were written out in today's note. So this is starting off with a 5-minute chart of the S&P 500. Here is the big gap between Thursday's close and Friday's open. Thursday we saw a little bit of a sell-off after making an all-time high the day before after the Fed. And so we sold off down and we almost filled that gap to Friday's close. Friday of the week before, we reversed above it by held it by about 2 points and reversed, and then kind of bumped around for the rest of the day. But at the very end of the day, we got this move at the end of the day that closed us above the halfway back point between that high we had set on Wednesday and the close we had made the previous Friday. So that kind of set the tone that we were in the more bullish camp than we were at bearish camp, because we were above the midway point of that big range. Well, we got positive news in the pre-market on the non-farm payrolls, and we gapped up open on Friday. Gapped up open, not just a gap up open, but a gap up open over that Wednesday all-time high we had made at 30.50.10, gapping up open Friday at 30.50.72. And we rallied up. Here was the PMI data that came out at 9:45. There were two surveys. The more important one was at 10 o'clock, but the initial one was at 9:45. So we made an all-time high. After that came in better than expected. And then the big one at 10 o'clock was this candle here, and we traded a 10-point range on this candle. So for future reference, if you want to trade this, because we're going to get the services double whammy, double survey PMI thing coming up this week. So if we want to see this same kind of trade happen again, you could have very well just left on a buy order, for some calls and gotten filled on this flush that happened at that 10 o'clock data point. Okay, so we made an all-time high, a new all-time high, kept striking those, and then we rolled over for a while, had the European close, yada yada, whatever. And then we were waiting on some China headline news because we knew we had the China phone call for the day, and those headlines started coming out, and lo and behold, in the afternoon, instead of selling the news, we bought the news, and we got another new all-time high around 1:45 Eastern time. And then at the very end of the day, we saw the market on close orders were to the buy side by 1.3 billion. So we got a nice move up in the very final moments to close at an all-time high and a new all-time closing high. So market moving in, money moving into the market at the end of the day. That's bullish for that whole thesis that we've got to get some money to roll in here and help support us up above our highs that we have been taking out. Okay, so let's take a look at the daily chart. So the roadmap. So here is our close and our high. We have this big gap now that's left to Thursday's close. Here you can see that pullback that I was talking about. And here you can see that move at the very end of the day where we jumped up over the halfway back point. We have our 10-day simple moving average moving up very fast. It's going to be up in here on Monday, and then by Tuesday, it's going to be up inside this gap. So what I was talking about in the note about getting one more day of rally in here so we can get up into this area up here, maybe around 30.75 to 30.80 before pulling back. That way, a pullback could take us down, and maybe all we would do was look into this gap, hold above the 10-day simple moving average, and reverse over the course of a couple of sessions if it plays that way. If we have already set our all-time high as of Friday and all we do is come in Monday and sit sideways, then we get Uber earnings and we get all that stock lockup expiration stuff that starts hitting us on Tuesday morning and continues on for a couple of days thereafter. Maybe then we're going to have to just take our pullback and our 1 to 2% from here. And if that's the case, I put the numbers in the note, but that would take us down lower, would probably get us to fill this gap and maybe look below it and break the 10-day simple moving average. And if things got really out of hand, we might go all the way down in here and test the 20-day simple moving average. But you can see that that's going to wind up getting us into a situation again where we never really get a substantial enough pullback to really buy things at a bargain. And then by the time people get on board again for the ride back up, we just hit a point and sell off again. So nobody ever makes any money. That's why I know that everybody wants to see this market roll over and get some huge, 200-300 points short, because you can't imagine that we're going to get a 200 or 300 ride upwards. But the problem is that if we don't move up high enough, then these pullbacks cause too much damage and we wind up just still stuck in this range. So what we want to see is one more up day so that we can come down, get a good enough pullback that still holds clearly above the support we need it to. Then we can buy that dip and we can ride it up for probably about a 200-point rally between now and the end of the year or into the first couple weeks of January. One more look here to support this thesis is looking at the weekly chart. And you can see that ever since we hit the all-time high in July and pulled back from there, we have been sort of stifled underneath this level at 30.28. So now what we want to see happen is, for all of our pullbacks, especially on a closing basis, to continue to hold above this 30.28 level. And you can see that we started this breakout here with last week's range from top to bottom. Even though that little bit of, of a pullback on Thursday got us down to not quite fill the gap, but we reversed and came back and closed very strongly above what we needed to. And then finally taking a look here at the simplified daily chart, which really gets you to focus on just the simple moving averages and the gaps. You can see that as long as we continue to hold above the 10-day simple moving average, and you can see how we have held above it here ever since this breakout on the phase one, the gap up open, the day that we were going to go into those trade talks when China was actually physically here in the U.S., the high-level trade talks or whatever. We gapped up open that day over the 20-day simple moving average. Well, on this Friday here that we just traded, we gapped up open over the all-time high that we had set on the Fed. So now we are operating on our own steam above an all-time high that we reached based on what we were going to get out of the Fed, one last rate cut. They told us that they're on pause now. They're not going to cut. They're not going to raise. They're just going to sit and see what happens. So now we're trading on our own steam above this level and above this old all-time high. So it's important to see this hold as support, and we could probably get about 200 points out of this and then come back early next year and get that sell-off that might take us down to fill these gaps, maybe even down as deep as this 28.87. This was the closing low for October. For Q4 so far. And so if you can see that if we got into Q1 of next year and made a pullback, maybe what we would do is come down and fill this gap and test this October closing low for Q4. Okay, that's putting the cart way before the horse. So, but a lot of people want to hear, what it would take and what's the rationale for how we could get down here, and that's it. So I hope this video kind of wrapped up things that you read in the note and help you understand that a little bit better. And that's it. Enjoy the rest of your Sunday. We'll see you when futures open tonight, and if anything good happens, I'll post about it. But otherwise, you've got what you need to get started on Monday morning. Have a good rest of your evening.